Sampler, and today's presentation is about how to improve the revenue and profit in your construction business without stress and overwhelm. So our agenda today is to look at the 5 big challenges facing 90% of construction businesses, why profit is more important than sales, and why cash is more important than profit. 4 key steps to transform your construction business from feeling overwhelmed to feeling confident, knowing you're running your business like a CEO with numbers driving your decisions. So my name is Eric Hempler. I'm a fractional CFO. Most of my accounting experience originated with real estate. I have flipped some homes in my own investing, so I am familiar with the construction process, and I have done accounting with construction businesses. Most of it has been with residential remodelers and I would say a light industrial commercial construction company. Their specialization, I would say, was more along the lines of renovating multifamily properties. So the 5 big challenges facing 90% of construction businesses is challenge 1, the business relies on the owner or it falls apart. The owner is wearing all the hats, often the roles they're not particularly good at. They need to focus on their strengths and delegate the rest. The business owner is constantly battling a catch-22. They can't grow the business without more money, but can't get more money without growing. The goal is to create freedom of time and money, not just high top-line numbers. Challenge 3, the business owner doesn't have a simple way to understand what's working and what's not in their business. Typical financial reports are made for accountants, not business owners, and can be confusing. There's a need for clarity on which numbers drive profit and cash flow. Challenge 4 is the business owner does not have clear goals. Lack of clear and well thought out targets for revenue, profit, and cash flow. Like driving without a destination that wastes time and resources. In challenge 5, the business owner does not have a clear path to follow to have a growing and more profitable business. Thousands of potential actions, but only a few truly impact revenue. Profit and cash flow. A solid plan is crucial to achieve targets. Let me rephrase that. Thousands of potential actions, but only a few truly impact revenue, profit, and cash flow. A solid plan is crucial to achieve those targets. So 4 steps to improve the revenue and profit in your construction business. Step number 1, generate more cash than you spend. That means it's not what you make, it's what you keep that matters. Focus should be on cash flow, not just profit or revenue. It's not what you make, it's what you keep that matters. Healthy cash flow means ensuring money comes in faster than it goes out. Every business owner must focus on generating more cash from their business, not revenue and not profit. This is a paradigm shift that big companies have already figured out, but they aren't sharing it with us. You generate more cash by ensuring that the cash is flowing in your business faster than it's going out. And that's not what traditional accounting reports show you. The traditional income has sales less expenses. This equals profit. But that doesn't tell the whole story. Once you make profit, you still must pay your income taxes. You have to account for uncollected revenue. You have to account for owner's withdrawals that take cash out of the business and don't show up in the income statement. And you have to account for paying off debt and buying assets such as inventory, equipment, and supplies. Those things take cash. So it doesn't matter how much you make, it matters how much you keep. Again, every business owner must focus on generating more cash from the business, not revenue and not profit. All the answers are in your numbers, yet most business owners aren't looking at the right numbers. Yes, you have an accountant or bookkeeper, but they're paid to tell you what happened in the past and file your taxes. They're not equipped to help you find the numbers that drive your profit or tell you what to do to move the needle. You need to focus on just a few key numbers. Then you'll start to understand which numbers are preventing profit and cash. And then all the key numbers to pay attention to are in your financial reports. That's what makes them so confusing. One of those key items is revenue drivers, which is leads, conversion rate, retention rate, purchase frequency rate, average purchase value. In construction, your leads are critical. We want to know what your conversion rate is of those leads. And we also want to know of those sales, how many do you retain. Some customers might not be, your frequency rate may not be real high because customers may not be returning, but we still want to have key numbers on leads, conversion rate, and retention, and the average purchase of value. So leads, the number of individuals who are a right fit for your business, who have been made aware of the business through marketing efforts and have indicated that they may be interested in purchasing. Conversion rate is the percentage of those leads that the business has been able to convert into a closed sale. The retention rate, the percentage of all customers that the business has been able to retain this year. And the cumulative, the goal is to get any customers who have purchased in prior years to come back. In our case, in construction, what you'll be looking for are referrals. And the goal is the same customers come back month after month. Again, this would be providing great customer service so you can get those referrals from your customers to get more customers. Purchase frequency is the number of times a customer purchased this year. Now, with remodeling projects, you may only work with them once, or maybe some time will pass and they'll work with you again. But this is something to kind of keep an eye on that helps you determine if you're maintaining good customer service. The average purchase value is essentially, the average sale you're making on each remodeling project or construction job. This information is helpful to know so we can forecast your revenues for the coming year. So those are our drivers that give us our revenue. Now we're going to look at profit drivers. Revenue, cost of sales, which is a percentage of revenue. And this is something that's going to be very important when we look at your cost of goods sold figures, because we want to know what percentage needs to be reserved from your revenue to cover the cost of remodeling. Payroll expenses is usually grouped in with overhead in most construction companies, but you will have staff that isn't part of the cost of goods sold section. This is your staff that isn't working at the job sites. This is your staff that's on site. Marketing expenses is going to be looked at as a percentage of revenue as well, because generally we're going to measure marketing expenses and look at what the return on investment is of your marketing efforts. And the rest is overhead expenses. So again, revenue, the amount of sales the business is able to generate through the 5 revenue drivers. Cost of sales is a direct cost that the business incurs when they make a sale, so the direct cost to renovating properties. And payroll expenses, the amount of expenses related to paying employees and contractors that are not included in the cost of sales. Marketing expenses, the expenses needed to generate revenue. This driver is defined as a percentage of revenue. Overhead expenses is the amount of all other operational expenses incurred in the business. And this equals our profit. And now we'll look at our cash flow drivers. We want to understand the increase and decrease in accounts receivable, track what customers owe, and ensure that they're paying timely. Increase or decrease in the inventory balance, keep track of materials and minimize excess stock, purchase of sales of assets, optimize the use of sale of equipment, increase or decrease of debt, use debt wisely and avoid unnecessary borrowing, investment or withdrawal from the owner, balance personal draws with business needs. And again, we kind of touched on accounts receivable already, the amount owed to the business from the customers. If the customer owes the business, available cash goes down. If the customer pays what they owe, available cash goes up. Inventory, the amount tied up in purchasing goods for resale. If a business pays inventory, available cash goes down. If a business sells the inventory, available cash goes up. Assets, the amount of tangible and intangible items that the business either buys or sells. If a business buys an asset, available cash goes down. Business sells an asset, the available cash goes up. Debt, the amount of cash borrowed for use in the business. If business pays down debt, available cash goes down. If business uses debt, available cash goes up. Owner investment withdrawal, the amount of cash that the owner puts in or takes out of the business. If the owner withdraws cash, available cash goes down. If the business owner invests cash, available cash goes up. And those are our cash flow drivers that give us our cash flow. And the next step is going to create targets for profit and cash flow. According to the SBA, 50% of all businesses never see their 5th birthday. And it all boils down to the fact that they ran out of cash. However, there is a predictable way to prevent failure. In the first step, we know to make cash flow your number one focus, not sales and not profit. We also know which numbers to focus on in our 15 drivers. In this step, we're going to take targets for the next year using those 15 drivers. So to set targets, you want to find out what you did for last year for each of the 15 drivers. Then create realistic targets for this year for each of those 15 drivers. Add up the 15 drivers targets to come up with your profit and cash flow target for the year. Now, the question is, how do you like those targets? If great, we can move forward. If not, let's determine which 15 drivers need to change. And here's an example of a driver worksheet. It goes through leads, customers, transactions. Here's the profit ones for revenue, expenses, payroll, marketing, overhead. And this is our cash flow drivers. So accounts receivable, inventory, assets, debt, owner draw, investment. And the next step is to keep score as you progress through the year. You can win the game if you can't win the game if you don't know the score. You have to stop managing the business by the seat of your pants and start managing by the numbers. As long as the decisions are based only on your intuition and not numbers, you are the bottleneck. And yes, you can never have freedom in your business. The key is to build a scoreboard that tells you which levers to pull to increase profit and cash flow. A scoreboard allows you to quickly and easily see how well your business is doing and what's preventing it from hitting your targets. A scoreboard also gives you an early warning system when things are going south, so you can fix it quickly. A scoreboard also allows you to be the owner and leader instead of being an employee in your own business. The right scoreboard will suddenly free you up from worrying if it's all going to work out this month. To knowing exactly where you stand day by day, week by week. The key is to build a scoreboard around the 15 drivers and forecast where you think you'll end up by the end of the year. So the last step is to create the action plan. There are thousands of small businesses that are stuck. They can't grow because they don't have the cash to reinvest in growth. They don't have the cash to hire more people, increase their marketing, buy adequate inventory, or buy adequate equipment. So the owner is simply stuck, ends up working harder and harder in the business. And the owner is stuck working too hard because they know there's a problem, but they don't know how to fix it. You want to break through the next level, you need a plan. The most important steps that you need to do this month to move the profit and cash flow needle closer to your target for the year. And here's an example of Mike's construction where he sets objectives in this first column, what the next steps are going to be, who's going to be in charge of those tasks, the date it's due, and then some notes. And so each month, annually you're going to set targets, and then each month you're going to revisit those targets, update and analyze them, create a forecast, update your score, create objectives, and then see next steps basically means where you repeat this whole process over and over. So this creates our revenue drivers, profit drivers, and our cash flow drivers. So your takeaway is there's a predictable way to grow profit and cash flow. This will enable you to make more money in less time with less stress. Profit and cash flow growth is inevitable when you understand how to move in the right numbers. So the next steps would be to get familiar with your drivers, set targets for this year based on last year's data, track progress in your scoreboard, consider a right fit call with us to personalize help. For further assistance or schedule a consultation, visit us at